Time for another stock review. This time, Momentus. We're going into space. We're going into space right now. Let's have a look at it. We're going to show you the insider trading, who's buying on the inside, who's selling on the inside. We're going to give you a profitability score. We're going to give you a solvency score. We're going to show you the inside trading. We're going to show you the news around the stock, the latest news, the website. We're going to do a back test against the S&P 500. We're going to look at the balance sheet, and all this information is provided completely unbiased. I'm not paid or sponsored to give this information. I'm using the most advanced algorithmic software, which takes away all the nonsense of Jim Cramer and CNBC and Mad Money and Working Lunch, where they're paid analysts. They have incentives. They get paid to say one thing. We know all about that. We've reviewed it many times, and we've been accurate many times on this. I use Alpha Spread. It's the most advanced algorithmic software. It just looks at the numbers. Sometimes I get accused of just focusing on the numbers, but the numbers is what it's all about. They don't lie. It's quite straightforward. What we're looking for is value, good balance sheets, low debt. That's what we're looking for, well-managed businesses. If you keep consistently investing in companies that are well-managed, you just consistently make money. It's as simple as that. It's very easy. What we don't do is get all excited and carried away by a trend. And full disclosure, I am not in any of these stocks whatsoever. I am 100% of my money all invested in the S&P 500. That's it. I transferred all what I owned before to my wife. My wife owns that, and it's all locked away. All my money is here invested with you in the S&P 500. So I've got I cannot be accused of pumping and dumping a stock or giving false information. It's all genuine and real, and all we're looking for is a good, well-run business to buy. We buy businesses, not stock prices, and that's why I'm consistently beating the market. And I will be at $100,000 within a year, and $1 million live on my show within 12 years. It could be a lot less than that, but at the current rate of my growth, I will be there in 12 years' time, and I'll be here consistently all the way through until $1 million. You'll see it happen live on the show. Okay, let's get straight into it. So the first thing we want to do, we're going to start nice and simple, look at very simple stuff, and then go much deeper into the stock. Right, so here we go. Momentus, what is it? We'll look at the website and more information in a moment. Momentus engages in the provision of in-space infrastructure services. It offers space transportation and in-orbit servicing. The company was founded by Mikhail Kokorich. I hope I pronounced that correctly. I apologize if not. In 2017, headquartered in Santa Jose, California. MNTS, Momentus, all right, 2017, California, 123 employees, CEO John C. Rood. So John C. Rood, if you're watching or anybody sees this video, I always put this on my social media. I'll never contact you. I don't chase anybody, but if you see my videos and you'd like to contact me, I'd love to have you on the show. I have a Meet the CEO series where I speak to the CEOs and those at the company to get your thoughts and reaction on all of this. Okay, if we are buying on margin, it's regarded as very high risk, 100%. Average volume, 1 million. So it's low volume. Be very careful with a low volume stock. You can get stuck in it. Can't sell it for the price you want. You have to sell it for lower. Today is 377. It's just over the third of the average today. No dividend, of course, here. This is a full growth stock, and low today, 73 cents. So this is a penny stock, of course. Very, very risky penny stocks. Anything under $5 is a penny stock, and if it stays in this range for long, it can be delisted. So it's a stock that's in very risky territory right now. It might have to do a reverse split. And so far, my experience, 2.5 years of doing this, reverse splits never end well. It's when the company is literally dying and it tries to remain on the stock. And I've yet to see a stock do well once it has reverse split, but I'm sure it's happened. Somebody will probably tell me. Anyway, 52-week high, $57. 52-week low, 66 cents. So you can see it's dramatically come down recently. Let's look at the earnings. Now, this is looking better, though. We are losing money, but we are consistently moving in the right direction. Slowly, but we're growing, and I like slow growth. I like when we're moving in the right direction. No problem with that at all. That looks promising. That's good to see. Who are we in bed with? In other words, what sort of investors invest in this company with us, at least on the Robinhood brokerage account? Astra Space, Virgin Galactic, Palantir, STEM, 3D Systems, QuantumScape. Well, I've not reviewed that one. I've had a brief look at Palantir. I know a lot about Virgin Galactic and Astra Space. I haven't reviewed that either. So I can only comment on what I know. We know that Virgin Galactic, I love Virgin Galactic. I'm in it myself externally through my wife, but it's not very well managed company at the moment. Marketing is rubbish, and they're not going bust. They've got a couple of years of money before they run out, so things are still good there. There's a lot going on. They've proved the concept, but we do have, at least from what I think here, I don't have a great deal of experience, none at all of these last three. The stock is going to be volatile because it's in the space sector. I'm just glad to see Mullins not in here and Lucid, because they are the worst over scam stock on the whole market. So I'm glad they're not involved there. Anyway, what about the chart itself? Well, just looking at the basic line chart, well, we can see we can see it's had possibly, yes, it's had reverse splits. It has to have had, but we're $1,200 up here, all the way down, and now we're down to 76 cents. This does not look good at all, but we'll come on to the numbers in a moment. That's not enough to decide, oh, let's buy it because it's down here. It doesn't mean anything at all without looking at the balance sheet. All right, let's have a little look at the website, see how it talks to its investors. Space, transportation, and infrastructure services. So from what I'm learning already, it talks a bit about servicing. So, it's all very well having all this technology going into space, but I guess we need space mechanics, perhaps, in space, one day servicing all the stuff that's now floating around in space. Anyway, so let's have a bit more of a look. If we can scroll down here, I don't know what we're going to see from this website. There's just contact details there, so not a very impressive website, if it is. To be honest. Anyway, let's look at the latest overview of the company. Momentus is a US commercial space company. I like the color, by the way. Bright pink is a bit unusual for us. I wonder why we decided that. Anyway, offers in-space infrastructure services, including in-space transportation, hosted payloads, and in-orbit services. Momentus believes it can make new ways of operating in space possible with its planned in-space transfer and service vehicles that will be powered by an innovative water plasma-based propulsion system. Can you believe where we are now, folks? We've got space businesses popping up everywhere, and now we've got our sort of first servicing business. This is interesting, isn't it? Interesting. We believe our planned service offerings will increase deployment options for satellite operators and lower the operating costs relative to traditional approaches, while also minimizing environmental impact, given our choice of water as a propellant. This is interesting, learning something about this. What about the latest news around the company? Now, unfortunately, this is the latest news I found. August the 7th. Yes, August the 7th, back in the summer. It's kind of strange, isn't it? But nothing really going on. This is from their own website. So if they have anything new, of course, they would have shared it. But anyway, what do they have to say here? What they had to say was in August, so I apologize, it's a while ago, but never mind. Logan, Utah, in-space transportation company Momentus is now offering a version of its Vigoride Tug as a satellite bus for commercial and government customers. This really does sound like the space maintenance team, doesn't it? Up in space. It's like incredible, really. Well, where we're going to be in 100 years from now, I have no idea. The company announced on August the 2nd that it was now offering customers a bus called M1000. The bus is similar to Vigoride orbital transfer vehicle that Momentus has flown 3 times so far, but without the water-based propulsion system it uses for changing orbits. The bus emerged from limitations flying hosted payloads on Vigoride, which remain attached to the tug rather than deployed as satellites. Rob Schwartz, Chief Technical Officer at Momentus, said in an interview that the company started gauging interest a year ago in hosted payloads on Vigoride, including from US government agencies. Okay, we know a bit about the company, but let's go and look at the numbers, because at the end of the day, we're investing in a business. Does it make sense? Let's have a look. All right, let's get straight into the actual value of the company. If it's your first time here, consider subscribing and ringing the bell, and tap the like button as well. As you're watching my video, leave a comment below and I will reply to all of my members. All right, let's look at the intrinsic value. Now, again, I'll give you the links in a minute to the software that I'm using, and all my members can get a free version of this or a paid plan, and I'll talk about that later on in the video, but you can all get a free version of this software. It's it's the best software I've ever seen for reviewing a stock. That's why I use it. Now then, undervaluation, 97%. Now, before we all jump to our pocketbooks and write checks to buy the company, we have to remember intrinsic valuation is not everything. It's part of the story. Some people just buy on this. They go, it said it's undervalued, so I'm going to buy it. However, we could have warnings if there's information missing, and I would imagine at the stock price and what it's achieved so far, it probably will have metrics missing. However, best case scenario, 98% undervalued, 97% on base case, and worst case scenario, 97%. So it looks like a steal. Everyone's going to go, I'm going to buy it. It's brilliant. Well, hang on a minute. Let's have a look. Do we have any warnings? Yes, we do. MNTS intrinsic value estimate is unreliable because it's based only on its multiples and doesn't use DCF valuation. That's because we have metrics missing. So this is why you've got to read further in. But on the basis of it, you think, great, let's buy some. Well, there's a bit more to it than that. Let's go into the balance sheet. First of all, the balance sheet will show us on the most recent range, and this was back in September of 23, 2.2 million, up 11%. Things are moving definitely in the right direction, up 11% on the most recent range, and we're expecting things to increase. Not exactly what I'd call an S-curve, but certainly moving in the right direction going forward. But this is just estimates. Operating income is also up 8%, moving in the right direction. Again, losing money, but moving in the right direction. Net income is up 7% on the most recent range. However, we are expected for things to actually go a bit worse later next year and beyond. Operating cash flow. We like cash flow. It's the secret to everything, really. Money's flowing in. We can remain in business, right? It's increased up 7%, but we are losing money. But again, moving in the right direction. Cash expenditure, capital expenditure. We've been investing, and we're now investing a bit less, but we've started to spend a bit more money again. Okay, operating cash flow up 17% on the most recent range. Let's look at the balance sheet. Is this business going to survive? Well, we have 33.5 million in assets. We have 29 million in liabilities. Not good. Not a good balance sheet. We have nearly as much liability as we do in assets. That's not a healthy balance sheet. However, let's have a look. Do they have any long-term debt? They don't have any long-term debt at all. Accounts payable 2.5 million, other current liabilities 11 million, non-current liabilities 6. No long-term debt though, which is good. We're not up to our eyeballs in debt, but we don't have any short-term debt either. We just have, it just says here, Other current liabilities, okay, 11.9, making up 29. Balance sheet doesn't look great, but we don't have any debt, okay? Anyway, but we've spent some money. Efficiency, now then, gross margin, 76%. Sounds great, but we have to compare that to the competition. What is the competition? Well, I'll show you what the competition is in a minute, and you can decide, you can compare the two. I will give you the link so you can do your own research, and you can decide whether it's good or not. Operating margin, negative. Net margin, negative. Of course, the company's losing money at the moment. ROCE is getting a lot worse, going down on the most recent range, minus 185%. Okay, so let's look now at the profitability and solvency score. Profitability is 31. For a young company with not much money on the table, it's not too bad. It's yellow, it's not red, it's not green either. Positive gross profit, exceptional revenue growth forecast. All that's bad is negative net income. Okay, exceptional 1 year revenue growth. So 31 profitability is not too bad. Okay, good. What about the solvency score? Well, it's not going bust. Like I said, it's not green, but a new company wouldn't be. Really, at this stage, it's more likely to be red, but it's amber. Once we get to about 50, we start to turn green. It's not too bad. Low DE, long-term solvency is okay. Like I say, it's not going bust anytime soon. Doesn't have any long-term or short-term debt at all. So that's very, very promising. So you can invest in this thinking, okay, it's not going bust, but it might need to raise some money and we might get a reverse split. So, it's not one for me so far. All right. Anyway, let's move on to Wall Street targets. Now they're giving massive targets here, 436% upwards, 452% on the best. On the worst case scenario, 431. So Wall Street really seem to like this one. Going forward, they think it's very promising. But Wall Street, as we know, are very good at gambling. They're traders, they're not investors. I don't know. Anyway, now moving on to the landscape, the competitive landscape. You can go and look at the competition. I'm going to give you a link to this software and you can scroll through the competition and you can see, which companies are their competition and how their balance sheets look and decide whether it's right for you. All right, ownership, inside trading. Well, during the last 12 months, Momentus insiders have not bought any shares, but they have sold 4.2 million worth of shares. And the last transaction was made in December, just a few weeks ago, by the director who sold $2,500 worth. $2,500 of the stock is nothing. That's probably a tax position. So I wouldn't be bothered about that. So this is literally, look, it's nothing. There's no selling here. There's a bit of tax position shuffling around. Nothing to worry about. I like to buy a stock before insiders have bought it. Once insiders have bought it, what comes next? Well, maybe growth or maybe they sell it again. I don't know. I like to identify it before. We've not got any real buying or any real selling at the moment, so it's a bit unknown at the moment. But it's not bad. No one's dumping all the stock and no one's bought it yet already. Okay, so anyway, there you go. What about a short position? What's the short interest on this stock? Well, currently 1.9% is the short interest. So with the volume that we've got some downward pressure, but we've got no short squeeze potential, none whatsoever. You have to have at least 20%. Remember, GameStop shorted at 100%. We need at least 20%, and we've got not enough volume. So all we got now is a bit of negativity, but it isn't that bad at all. I mean, if Apple is about 0.7, I think it is. There's always somebody will short something. But 1.9, there's not much interest on this. My thoughts are on this. Let me have a look how much news is around the stock. Just green stock news. So my thoughts are, after today, give it a week, we will rank number one in my estimation on Google. Sorry, not Google, on YouTube for this stock. I am pretty sure that because of space, and we got a lot of space people here, I think we'll rank number one on this. Now, why I'm telling you that is there's not a lot of interest in this stock because there's not much news around it. It's just the green stock news. We saw this with Lilium. Look, there's nothing here. And then the moment someone starts talking about it, who ranks on YouTube like I do, it gets noticed. So I would bet you any money you like, within a week of me doing this review, the stock is over $1. Let's just see if I'm right, because we'll draw some attention to it. The fact that there's not much short interest, that will encourage people. Also, there's no massive insider selling. Also, their debt position is good. Their solvency is good. Things are slowly improving. As we're the only ones talking about it, as has all the other reviews I've done, it'll probably pop up like all the others did because we'll rank number one for it within days. So I would imagine you will notice that very, very quickly this will be $1. I wouldn't be surprised. Let's have a little personal bet, shall we? It'll be $1. I would like to play these reviews, but these are so long ago, they're not really relevant. Sentiment, well, again, same thing. Look, there's hardly any news. The last 90 days, a bit of negative news. Last 30 days, it's a lot more, 50%, 3 stories negative. Last 7 days, just one item today. There's nothing. Very, very little. So, as I said before, we will rank for this very, very quickly. And I wouldn't be at all surprised, just like all the other stocks I reviewed, it'll pop up 30% very, very quickly to over $1. Anyway, that's my thought on that. Let me go and look now. This is a little bit irrelevant, but still worth doing. Because if you're an investor, you have to do this. If you put $10,000 in the S&P back in 2020, which is as far back as we can go, you would now be at 15, nearly 16 grand. As you can see, you'd have a nice little profit there just over the last few years. There you go. And 10,000 would now be worth $35. Yes, $35 here in Momentus. Momentus is clearly, obviously, in red. So not very good at all. You can see we've got a steady line through the S&P and we've got this spike up. So I want to know what caused that. We'd look back on the news, investor pages of the website, see what caused that, and then we can give some estimation of where we're going. But just because we're down here, intrinsic value does look interesting. Balance sheet looks okay. Solvency looks okay. Lack of news, lack of shorts. We can rank for it very quickly and it'll go over $1, I'm sure. Really sure of that. You watch what happens within a week. I'll bet you any money you like. And the stock is just going nowhere. A little bit of news, maybe. Well, we can do that. The stock can move up. So anyway, full disclosure, I don't pump and dump stocks. I'm not buying it. I don't own any stocks. I am fully invested in the S&P 500. That way, I am seen as a TV channel, as a media outlet, not as someone, not a cheap YouTuber just trying to sell views or pump and dump stock. I'm not Roaring Kitty at all. Of course, my real name is Martyn Lucas, so I'm here to help and support people. So there's my opinion. It's not a buy from me because I don't buy single stocks anymore. I'm fully invested in the S&P for integrity of the channel. But I do think, as a personal little bet, it'll be above $1 within about a week or 2 weeks or so, because we'll rank, and I'm giving it an okay. I don't know where it's going in the future, but it's not going bust anytime soon. Short interest isn't that great. There's no inside selling, dramatic selling anyway, just a bit of tax position. I think this will do okay. So there you go. If you'd like to find all the links, how to get Alpha Spread, my members can get a free version of it. Click above my head or in the description below. If you want to get a premium plan, that in other words, to review as many stocks as you want in more detail, then you can. And whenever you do pay for the plan, they do give me a one-time commission for doing that, and whatever. But if you go for the free plan, you can review a stock or two, I think, completely for free. There's no cost involved whatsoever. And there you go. I'm not paid or sponsored to say this. I do the reviews just because I use the software for my own, investing strategies. Anyway, there you go. Above my head, down here, and I'll put the Alpha Spread review. I've done 60 plus stock reviews, and there's many more to do. They're all over here. And any updates on Momentus, more videos I think you'll like over here. And let's see if we're not above $1 within 10 days to 2 weeks. Anyway, I hope you like that. That's my review, my first review on Momentus. If you'd like a review done for you, it's a service I provide as a perk to all my members. There you go. Until next time, as always, take care of yourselves and each other.